Okay, beautiful and welcome, guys. Every single one of you, beautiful human beings, guys, welcome to Dollars for Lunch. If you're joining us on Telegram, if you're joining us on YouTube, no matter where in the world you are joining us, make sure you jump in, like and subscribe as always, and follow, because there's a ton of massive things coming over the next few days and over the next few weeks. We're going to continue to take things to the next level with every single show, with every single thing that we do. Now, coming up in the course of this week, guys, we will start to get more active in terms of the day to look at different instruments and market opportunities and send them to you as they pop up and as they become relevant. So market structures that are ready to break, trades that I'm going to be looking at in the course of the days, but we're just easing into and making sure that these shows and what you're experiencing is at the next level or the best we can potentially do. So without further ado, the first thing we're going to do is we are going to be jumping into and having a look at what is busy happening in the world from a quick news perspective. There's not all too much to speak about, but we're just going to jump in anyway and just give it a quick look. So let's just jump in and have a look at what we're busy seeing. Okay, so in terms of the news, there's not a lot to be spoken about. There is an interesting article, and this really speaks about, in terms of what's happening this week. And I'm going to share this article because it gives a little bit more insight as to what we can potentially see from some of the interest rates decisions from the European Central Bank meetings, as well as some of the broader meetings regarding a general energy crisis, which is what the world is busy speaking about. So I will share this link directly within Telegram, and it's going to be fairly good in order for us to take a look and see this, and also have a look at what happened with non-farm payrolls and why we saw such a massive effect on the markets, and not a good one to say the least. So we will be diving into that a little bit deeper, but I think without further ado, we're going to prepare for this 3:30 New York Stock Exchange Open, where we can expect a ton of volatility. So I would like to jump into that first, and then we will get back into what it is we need to look at from a news perspective. So first things first, I just want to quickly touch on the non-farm payroll move that happened on Friday, right? So just to show you how volatile these markets are and how risk management is going to be key in this next space that we're moving into, right? We can see positive data, we can see negative data. Regardless, markets, and this is just something everybody needs to understand, is that data that we get is delayed, right? So we're seeing jobs data, we're seeing growth data, we're seeing GDP data, we're seeing interest rate change data, but this data is always delayed, coupled with the fact that majority of smart money is not looking at today. They're not looking at what is being presented right now. They're looking at the next quarter, the next 6 months, the next 2 years, and smart money is investing long term. So when we see some of these massive moves, they often are contrary to the data. And for some of you that have been trading for a while, you're starting to notice a lot of disconnects, right, in the market. A couple of years ago, we used to get fundamental data. If it was good, markets would rally. If it was bad, markets would sell off. It's not the way things are anymore. And so risk management is absolutely key. And so let's look at a couple setups that we're going to potentially be taking this afternoon. So one of the ways that I like to structure my charts, right, is I like to have the same chart open in different time frames. So in front of us right now, we have US 30. I've got it on a 15 minutes, right? And then I've also got US 30 on a 1 minute time frame. Now we are 5 minutes ahead. We haven't yet, obviously New York Stock Exchange hasn't yet opened. As you guys can see, we're sitting 4 minutes to the open, and we're already seeing this impulse towards the downside, right? We saw this happen yesterday as well. Markets are moving earlier than that 3:30 mark, right? And if you guys know why that is, please drop in the comments down below. But ultimately, we previously will always wait for that move to end up happening, or at least show its hand or what it is that it is potentially trying to do. So in this case, markets have already popped off, right? And generally speaking, this would and should only happen at 3:30, showing one of two things. Either there is news in the markets that has not become public knowledge yet. The New York Stock Exchange has got data internally that investors are seeing that we don't see, but we would have only expected this to start moving at 3:30 on the dot. In some cases, only 3:31 right on the dot. And this would be a move that we would have wanted to capitalized on only once the move had been made. So in most cases, I wouldn't jump into a trade after the move has been made. Right, we generally wait for that 3:30 mark. We saw yesterday a very similar type of thing happen. If we just go back to yesterday's session, albeit the markets were offline, if we just have a look at yesterday's move here, markets started moving a couple minutes earlier to that mark, and then at around about 3:36 markets started to stabilize, and then we saw a massive, or more of a buy momentum, where markets are starting to move a little bit earlier these days than that 3:30 mark, which is obviously a little bit troublesome. And to be honest with you, I can't tell exactly why that is, because the New York Stock Exchange opens literally on the minute at that 3:30 mark, and this would have been a trade we would have liked to have capitalized on from a sell side or a sell move. Now, because it's moving so early, one would be tempted to jump in this. Unfortunately, with a move like this, it could always reverse and come back up and break up above here. So what we're going to do is we're going to wait for that 3:30 mark, and we're going to see what this market does. Now, quick check. We have a 15 minutes. We can see we're breaking structure, which is what we originally wanted. On a 1 minute time frame, we've already broken out of that. German 30 is facing resistance. On a closer front, on a 1 minute time frame, we are making that push down. So for me to jump into US 30, if it is an early breakout, I'd want to see German 30 break, and I'd also be very keen on what Nas does, right? So Nasdaq on 1 hour time frame, have a look here. The breakout also started 5 to 6 minutes premature prior to that move. So at 3:30, right, in the next 2 minutes, we're going to see what that result is. And if markets hang down below and there's any further momentum towards the downside, we could potentially follow this trade towards the downside. But historically, we would wait for that 3:30 break and then make a decision in terms of where we would want to be. So we're going to keep monitoring these. And generally what I generally like to do is I like to keep these windows open on their own. So I'll keep open NAS 1 minute, I'll keep open German 30 1 minute, and then I'll pretty much minimize everything else. So if you're trading on a desktop, this is a really great way. Keep only those 3 windows open, and then you want to go ahead and grab this button over here, which auto arranges those 3 windows. So in one view, you pretty much have all 3 markets side by side, so we can establish at that 3:30 mark what is happening. So we're about 10 seconds out, and let's give it a look. So some of the times I do like to open up the tick data, right? And the tick data will just give us a little bit of perspective. I've got US 30 open here on a tick data perspective. And as we can see here, the 3:30 opening bell, markets are pressing a bit up. And that is why to jump in prematurely can sometimes be a bad thing. Have a look at that, right? How markets are busy spiking up. So what we would want to see here, specifically on US 100 and US 30, if markets break this level and hold out at 331, that could be a great indication for a long trade. Alternatively, and let me just move my face for this one because you guys don't need to see me for this. Alternatively, in this case, if markets stall out here and we see some pushback towards the downside, we will then go and start to move down to the short trajectory. Guys, please give me feedback and comments on your side if you are seeing any sort of delay on your systems, any sort of timing issues there. Please let me know. I am on a fiber link. There we go. Okay, so we are getting that rejection there on that level there. So what we want to do now on this US 30 mark, generally speaking, the first move is where we want to be, right? So that first push, right? If it's a buy, that first buy, we generally want to take it, right? If we see that it's the first push is a sell, we generally want to take that. Markets may range, but generally speaking, that's where we want to be from a trade perspective. So because the first push was a buy, what we're going to do in here is we're going to grab that buy. Only thing I don't like in this particular space is that we have US 30 pushing up and we have NASDAQ pushing down. So we have a little bit of uncertainty across the board here. Now, what we're waiting for is one of them to break that previous high. So whether it's US 30 or NASDAQ first, that'll generally give us a little bit of a better indication. So markets are super choppy today. And they're doing the exact opposite thing. So I generally don't like to see this, right? If I'm seeing NAS push down, US up, and German 30 holding steady, one of them is going to give the true direction. And I'm a little bit worried because US 30 has broken its high, NASDAQ has broken its sell. So one of them is going to reverse, and I don't want to get stuck into one of those trades. So let's just wait and see what we get here. Ultimately, if we can see German 30 break the structure, I would be confident to short US 30 and then short NASDAQ at the same time. But let's wait it out. Sometimes it is a little bit of a waiting game. Sometimes it does require us to have a little patience, allow the market to give us its direction, and not obviously have anything premature. There's no harm in missing a trade or not taking a trade if you don't have exactly what you need in front of you. In most cases, this move over here, which should have only happened at 330, if this move was a buy and everything else started to move as a buy as well, I would have had no issues buying it. But the fact that we had that premature move towards the downside, we've now got a little bit of a range happening, makes it that these three market conditions combined would not be ideal for me in order to enter, in order to get into a trade. But let's have a look. If German 30 breaks and US 30 pulls back down, I'm more than happy to consider getting into a short here. Let's give it a watch. And so what I'll do is I'll go back and have a look over the past couple of weeks, how often have we had these early breaks? Because it definitely seems, based on what we're seeing here, yesterday we had a break towards the downside, market stabilized and then recovered to the top side. Okay, that's what happened yesterday. So that is why I'm a little bit cautious of a continued sell, and I would like to see markets recover above these levels and a potential buy transpire. But we would need each of these to confirm their current positions. So let's have a look. So for those of you who've been following me for a while, we are going to be jumping back into all of these New York Stock Exchange sessions. Again, if you are on Telegram, the latency is obviously next to nothing. If you are on YouTube, it can be up to about 20 seconds of a delay. So there we go. We can see we may very well be breaking to the top side. Let's have a look. Let's have a look. There is certainly indecision in today's move, and partially potentially because of the US banking holiday, very, very possible, but a ton of indecision. So when a market ranges like this, I generally don't like to trade indices when we have these types of ranges. But yes, it could be a sustained move down. We just need to wait and obviously have a look at what that looks like. So in the past, and just to give you a little bit more perspective, we generally would allow for about a 10 minutes, 10 minutes to elapse for markets to sort of reveal their next direction. So giving a look at yesterday, and this is why, past data is so important. If we look at yesterday, we did the same thing. We broke down a little bit earlier, and then at about within the next 7 to 8 minutes, markets broke up, made a slight push down, and then 5 o'clock, we got the next move, or the next, sorry, not 5 o'clock, 4 o'clock, we got the next move. It ultimately resulted in a bull run that pretty much ran 1,600 pips to the north side. So there's no harm in waiting, right? The initial moves, yes, the initial moves can be 800, 900 pips, 1,000 pips, but the bigger move, if you can catch that and secure your risk through stop loss, that is where the real money sits. So it's always great to catch a nice break, but ultimately, if you can catch that market structure evolving and obviously catch the longer move, that is where we would want to be for sure. Okay, so if we have a look at NASDAQ is starting to give us a little bit of a clue as to what's happening here, right? So can we see this indecision, right? We can see that markets are neither making they're making higher lows at the same time. We're also making lower highs. So we're in this symmetrical triangle type formation, and this means basically indecision. Markets don't know if they want to go higher or lower, and generally speaking, the closer we go to the apex, the closer we get towards a decision. So markets are definitely selling, guys. Markets are selling. That's where she wants to be, and so that is a nice, healthy, strong push there, both from NASDAQ as well as US30. And we've got those sells in place there. Stop losses already into profit. And look at that market push, right? Stop losses already in profit. That is the most important thing, is that you lock your stop losses into profit. So in my case, I've already got some trades up here stuck into profit. And as she continues to move down, look, ideally, you don't want to move into profit too quickly, right? For the reason being that markets could push back up and just take out your trade, and you haven't made or lost any money, which is fine. But ultimately, you don't allow any space for that trade to breathe. So what we would want to do in most of these cases is you'd look at the move down. Let me open up US30 a little bit bigger. In most cases, we would look at this move down, measure Fibonacci, right? We know that the maximum pullback is a 78.6, and that is generally where you'd want to put your stop losses if you want to take it a long-term trade. But as we can see here, we're in beautiful profits. Markets are pushing down, making really, really good money. And here we've been patient. We've taken the longer trade. All stop losses are now in profit, right? So we are now running. That is 600-700 pips in profit there on that quick move. So that's the beauty of indices, and I suppose that's why people love it, because the pip count is massive. And this is obviously one of the massive benefits of Globex's gearing when it comes to US30. Every time you open a trade with Globex has got a 1-to-1 ratio on US30 in terms of their contracts, right? Meaning that most of the brokers have got 1-to-100 contracts. So when you're opening a position, you're opening the tantamount to 100 contracts. So their 0.01 is equivalent, right, to our one lot position. So meaning we can open less than a 0.01 in other brokers, meaning A, more affordability, B, better risk management, because you can obviously manage risk better. You can open smaller trades if you have a smaller account, and C, there's lower margin requirements in order to trade. Guys, look at this beautiful trade. Look at that. Can I get some comments on the YouTube? Can I get some amens? Can I get some let's go baby? That is 1,000 pips per position right there, and you're seeing it all happening live as we go. So massive beautiful short there. And again, it's just about being patient, guys. Catching the move is great, but ultimately we want to make sure that we are pushing and making money. So stop losses are in profit. I'm going to go ahead and drag some stop losses into further profits. And what I'm going to do is I'm going to teach you guys real quickly. This is a bonus lesson, right? This is a bonus lesson. I'm going to teach you how to close a partial trade. Here's a partial trade, right? So you right click on your trade, right? You want to modify or delete the order, okay? And then what we want to do here, oh wait, where do we go there? Ooh. Okay, it's a bit different on my phone than it is on my PC, so I'm not going to bother with that before I get too cheeky, but I'm going to close up 2 of my positions there, running 1,000 pips per trade there, and I've opened up very, very small trades there, right? As an example, my stop loss is in profit for my last position. So just to give you a little bit of an example, right? We've run out of time. I get it. We're overrunning. It is what it is. If you opened, right, a 10 lot position, as an example, on these particular items here, that would have been $1 per position, right? $1 per pip. We ran 1,000 pips for each trade, $3,000, 50,000 Rand made in the space of how long? 10 minutes. Guys, who couldn't live off 50,000 Rand in 10 minutes? Anyways, guys, we are open to question answers. Stay tuned, stay connected to G360 TV as well as in the groups. We're about to do some crazy things. This is only the start. This is just the tip of the iceberg. There's a reason why people don't trade live within Southern Africa, within Africa in general, because these things just cannot be done on a day-by-day basis. People come into the markets, spend 6 months, call themselves a guru, and are selling people courses and all kinds of the crazy things. Fine, it's happened, it is there, but you're now home, you're now in the one place where everything has just come together. Between Globex 360, G360 TV, and 360 Traders Academy, you now have a full circle. Not only do you connect it to the best transparent licensed broker, longest established broker in the country, you now have a live TV broadcast of trades. It's just going to keep getting better with a brand new education system that we are plugging in very, very, very soon. The education system has been slightly delayed because we just want to make sure that it is absolutely world class for every single one of you. And guess what? We're still running in profit. Look at that trade right there. We're now running, yeah, it's still a runner. So I'm going to drag my stop loss further into profit. Now, another thing that's very useful, guys, is measure your trade here, right? We can see here it's reading 528 or 529 points. Okay, so I want to use a trailing stop. So I'm going to use 5,200. So I'm going to go right click, and you guys can't see this, it's just off the screen, and you're going to put in a custom trailing stop, right? So in this case, I'm going to put in a 3,000 points trailing stop, which is equal, and have a look at it, it'll just drag and keep my stop loss relative to market. So if markets pull back up, it's going to make sure that I secure as much profit as humanly possible. If markets pull back and closes me out, puts money straight into my trading accounts. Guys, that's all we have for you today. Make sure you check our brand new broadcast tomorrow morning, pre-recorded video delivered directly into your inbox. As always, it's just going to keep getting better and better. It's just going to keep getting better and better. To every single one of you beautiful human beings, as always, be safe, trade safe, and it's been an absolute pleasure. Guys, much love, and we will see you a little bit later. Shalom.